Okay. This video, I would like to discuss with you MCQ paper, accounting paper 1. Question number 16 and 17. Question number 16 and 17 is dependent on the given information. That is, this is the paper. Use the following information to answer question number 16 and 17. Madhu, Nilu and Raju carried out a partnership sharing profit and losses in the ratio of 3:2:1. Right. Then there are 3 partners in the partnership. They have distributed profits among those 3 partners 3:2:1. That means 3 goes to Madhu, 2 goes to Nilu, 1 goes to Raju. The capital and current account balances of partners as at 1st April 2018 were as follows. Madhu, that is the opening balances, because at the end we are asked to find what is the value of goodwill of the partnership as at 31st March 2019. Therefore, the given details are as at 1st April 2018. That means opening balances. You are given opening balances both capital accounts and current accounts. Madhu, Nilu and Raju. Then you are given opening balances as at 1st April 2018. And first question, you are asked to find the partnership goodwill as at 31st March 2019. Then here, you read the question, you are given some details. In the appropriation account, what we do, we distribute calculate net profit among the partners by using different ways like interest on capital, paying salaries to partners, and paying finance share of profits to the partners. Those are the ways of distributing profit calculated in the partnership. Then, as we are given opening balances for capital accounts and current accounts, and also, again, they have given you closing balance payable to retired partner. If you read this, the partnership earned a profit of 600,000 for the year ending 31st March 2019. Raju retired from the partnership on 31st March 2019. That means at the last day, Raju, third partner, has got his retirement from the business, and the total amount payable to him on this date is 1.5 million, that is 15 lakhs, was transferred to a loan account. Madhu and Nilu continued the partnership from this date, sharing profit and losses at the ratio of 2:1 respectively. That means after the retirement of third partner Raju, the existing partners Madhu and Nilu has agreed to share profits and losses between those two 2:1 respectively. That means all profit ratio is 3:2:1. After retirement of Raju, the new profit sharing ratio is 2:1. The goodwill of the partnership is adjusted through the partners' capital accounts, and goodwill account is not maintained in the partnership. That means, if you are given this sentence, that means goodwill account is not maintained in the books of accounts, and we have to adjust goodwill through partners' capital accounts. It is a famous adjustment. Therefore, if you are asked to adjust goodwill through the partners' capital account, then what we have to do is you have to credit to all partners' capital account according to their all profit share ratio, and we have to debit to new partners' capital accounts depending on their new profit sharing ratio. If I repeat the same thing again, if you are asked to adjust goodwill through the partners' capital account, we have to credit to all partners' capital account depending on all profit sharing ratio, and we have to debit to new partners' capital accounts depending on new profit sharing ratio. But here we are not given the goodwill value calculated in the business just after retirement of partner Raju, but we are given 1.5 the final amount, the total value payable to retired partner Raju is 1.5 million. It is given. That means they have already calculated the amount goes to retired partner Raju. Therefore, total value payable to Raju is 1,500. Then it is included capital accounts balance and partners current account balance. Normally, total liability means payable to Raju means addition of both capital accounts balance and current account balance, the closing balance. Yes, they have given you 1,500, that is 1.5 million. That is equal to addition of closing capital account balance and current account balance of Raju. Here, Raju's opening capital account 1,000, current account balance 100. Right. Then we can adjust the given details in current account and capital account in Raju, and we take the closing balance. Here they have mentioned partners earn a profit of 600. Now they have given just net profit. Then as we are given closing balances for Raju 1,500, 1,500 consists of Raju's capital account balance and current account balance. Therefore, we had to find the amount relevant to Raju separately. Because when it comes to opening balance, capital accounts 1,000, current account 100, no. Addition of those 2,100, but we are given 1,500. That means additionally they have added another 400 to the opening balances. Therefore, we have to find how much is coming from capital account, how much is coming from current account. Right. As we are given profit for the year 600, profit we have to distribute among partners depending on all profit sharing ratio 3:1. Right. When you divide by total of profit sharing ratio 600, then 100 goes to Raju, 200 goes to Nilu, and 300 goes to Madhu, depending on their all profit sharing ratio. Therefore, from the current profit, Raju is to be given 100. Then that 100 should be credited to Raju's current account. Then Raju's current account balance will be 200. Raju's current account balance will be 200. Raju's current account balance will be 200 because opening balance you are given 100. Then when you distribute the profit calculated for the year 600 among all three partners, out of 600, 1/6 goes to Raju because his profit sharing ratio is 1. Therefore, 100 goes to Raju. Then his current account closing balance will be 200. Right. Then 200 plus 1,000 will be 1,200. But we are given his balance, closing balance 1,500. Therefore, another 300 is added to opening capital accounts. That means capital account has increased by another 300 because of goodwill. Because of goodwill. Therefore, the difference will be coming from capital account, opening balance 1,000, but 1,300 is difference. Therefore, 1,300 will be coming from capital account, opening balance 1,000. Therefore, goodwill has been added to capital account, or goodwill has been credited to Raju's capital account 300. Right. Now we found that amount came from goodwill to the Raju's capital account is 300. That is goodwill portion for the retired partner. Therefore, 300 is equal to 1/6. That means 3:1. Raju's ratio is 1. Portion is 1. Therefore, what is coming from goodwill to his capital account 300 equal to 1. Therefore, 1/6 equal to 300. Then 300 into 6 equal total goodwill value. 300 into 6 equal 1,800. 1,800 rupees will be equal to total goodwill. Now we found total goodwill. Right. Here the question is, what is the value of goodwill of the partnership as at 31st March 2019? Okay, then we can easily found 300 came from capital account balance, that is equal to 1/6 of total goodwill. Then when you multiply 300 by 6, it is 1800. Therefore, we can select answer 5 as a correct answer. Answer 5 is the number 5, that is 1800 is the correct answer. We can show you workings by using Excel sheet or Word and do, but at the examination you can do a short working and find the answer, because we can't take much time to solve these type of questions because you are given only 2 marks, right? Then answer is number 5, that is total value of goodwill is 1800 rupees. That means 1.8 million. 1.8 million, right? Then next question, what is the net impact of the goodwill adjustment on capital account balances of Madhu and Nilu as at 31st March 2019? What is the net impact of the goodwill adjustment on capital account balances on Madhu and Nilu? Right. Here we completed Raju's account and found the total goodwill value. Then through that answer, we can find the answer for question number 17. We are asked to find the net impact for Madhu's and Nilu's capital account. Here, total goodwill 1800. Then we distributed 300 for Raju because 1 share. Then Nilu 600 because 2 shares. Then Madhu 900 because 3 shares. 900 and 600 separately should be credited to Madhu and Nilu. Right. That is according to all profit sharing ratio, because all 3 partners were there in the partnership before the retirement of Raju. Then when you record goodwill in the capital account, we had to credit 300 for Raju, Nilu 600, 900 Madhu. Then we have to debit to new partners current account, existing partners capital account, depending on their new profit sharing ratio 2:1. Like how to account for all profit, depending on all profit sharing ratio, we have to credit to capital accounts, all partners capital account. Depending on new profit sharing ratio, we have to debit to new partners or existing partners capital account. Then depending on all profit sharing ratio 3:1, we credited 300 for Raju, Nilu 600 and Madhu 900. Depending on their new profit sharing ratio 2:1, we have to debit for existing partners Madhu and Nilu. Then when you divide 1800 by 3, for 1 share will be 600. Therefore, 600 we have debit to Nilu's capital account. Then 1200 we have to debit to Madhu's capital account. Right. Then when you consider debiting 600 and crediting 600 in Nilu's capital account, net effect will be 0. Earlier we credited 600 to Nilu. Now depending on new profit sharing ratio, again we debited Nilu's account 600. Net effect is 0. Net effect is 0. Now we found. Then net effect is 0 means no effect. Then when it comes to the answer Madhu Nilu, no effect. Answer number 1. Answer 2 we have to reject because we are given an effect. Answer 3 we can select no effect. Answer 4 and 5 also we have to reject. Why? We are given an effect. Therefore, we can select either answer 1 or 3. We can't exactly now decide because we have to further think. Then when it comes to Madhu's capital account, we credited 900 to capital account, Madhu's capital account, depending on all profit sharing ratio. Depending on new profit sharing ratio, we debited 1,200. We have already created 900 to Madhu's account, depending on all profit sharing ratio. Depending on new profit sharing ratio, we have to debit 1,200. Debiting 1,200 and crediting 900, net effect will be 300 debit. 300 debit. That means if you debit to a capital account, that means decrease in capital account. If you want to debit to capital account, that means decrease in capital. Right. Then here, when it comes to answer number 1, no impact, that is wrong. Answer number 3, a decrease of 300,000. And that is the correct answer according to our details found through the capital account of Madhu and Nilu. Then answer is a decrease of 300,000 rupees and no effect for Nilu's account. Therefore, answer 3 is the correct answer for question number 17. Answer 3. Answer Madhu's account, a decrease of 300,000 rupees and no effect in Nilu's account. Why? We debited 600 and we credited 600 in Nilu's account. Therefore, net effect 0, no effect. But Madhu's account, we debited 1,200 depending on new profit sharing ratio. 1,800 divided by 3 multiplied by 2. We had to credit 900 depending on all profit sharing ratio. That is out of 1,800. We had to credit 600. Therefore, 600 debit credit, no effect. But when it comes to Madhu, depending on all profit sharing ratio, we credited 900. And depending on new profit sharing ratio, we debited 1,200. Therefore, debiting is more than crediting. The difference is 300 debited. That is equal to a decrease of 300,000 in Madhu's account. Decrease means debiting. If we have to debit to capital account, that means decrease in capital. Answer is number 3.